Hey, everybody. Welcome to our 24th happy half hour. I
24 happy half hours?
24, 24.
24?
Oh, man, it's 23. I thought it was 24. Oh, man.
Ah,
All right.
well,
Well,
time,
23.
plus or
Time doesn't
minus
go by
epsilon.
that fast.
Plus or minus epsilon,
At this point,
We're
uh,
still in the pregame show, folks. We always
no,
start a
we're
minute or
not.
two.
No,
No, we
we're not.
aren't. Are we
It is
there? Oh,
officially 4:30.
okay. Well,
Officially
welcome,
our happy half hour.
welcome everyone to Carolina Retirement Planners 23rd happy half hour. It's been 23 weeks now. We've been here every Thursday at 4:30, inviting you to stop by with a glass of your favorite beverage for a half hour of hopefully educational entertainment. What are you drinking today, Sam?
Well, today I am so this is not what we're going to be talking about. I'm a little embarrassed. I should have prepared better. I am drinking a sparkling cava. It's what I had open in the fridge. Uh, and I'm sure you're drinking your normal tea, right?
Shame on
I'm
you,
drinking my
Sam. Shame
normal
on
tea.
you.
I know. But okay, so we like to talk about what day it is today. And we mentioned this in our reminder email, but today is Beaujolais Day. Beaujolais Nouveau.
Beaujolais Nouveau. It sounds
Yes,
like one of them there French wines, eh?
it sure is.
Yeah.
And so some of you may be aware, I know that from some of the emails that we got, some of you are definitely aware of Beaujolais Nouveau. But I thought for those of you who aren't, it's kind of cool. So I thought I would tell you a little bit about it. So Beaujolais Nouveau, Nouveau is, new, fresh. It started because in the region of Beaujolais in France, yes, Dad, um, the growers and the winemakers, they would gather to celebrate the end of the harvest by toasting with some of the young wine produced that year. So they would basically just like really quickly make a batch of boozy wine with their lower quality grapes just so they could drink it and all get drunk and celebrate. Well, that it ended up taking off. It kind of the trend swept across France, Paris. Everyone in Paris, it was like who could get the first bottle of Beaujolais Nouveau to Paris, and it turned into this global thing. And so now the third Thursday of November is officially Beaujolais Day worldwide.
Yeah.
So
I don't, are
12
you're not even supposed to open a bottle before that day, right?
No, no, it used to be that third Thursday was when it could be shipped out, but now times have changed. And so, if you go to your local grocery store, your wine shop, they'll have it sitting in the back. And then today if you walked into a store, you maybe saw a large Beaujolais Nouveau display.
Mm.
And actually, what's kind of cool is Donna and Michael had emailed us to tell us about an event at their local wine shop where they would all gather at midnight. And at midnight on Thursday, they would all pop open the Beaujolais Nouveau bottles in celebration.
Oh,
So it's
let, let me also remind everyone, if you're on Facebook with us, if you look where it says sharing down below, you click there and start a watch party. Click watch party, and it'll tell your Facebook friends that you're here and they can join us as well. It's a good way to educate them on the latest cheap, fresh wines, and all the other good things we impair. So we love it when you start a watch party for us. So
all right. Well, so one of the beautiful things about this is that yes, it's this young fresh wine, but everybody around the world, all around the world today are drinking their glass of 2020 Beaujolais Nouveau. Now, another thing to remember, I love the region of Beaujolais. So when you're drinking a Beaujolais Nouveau, the grape is not called Beaujolais, the grape is Gamay. If you drink any wine from Beaujolais, the grape is going to be Gamay, similar to if you are drinking a glass of Prosecco, you are drinking the Galera grape. So it's named by the region rather than the grape. Um, so the notes, the way that it tastes, the Beaujolais Nouveau is young and fresh and fruity, but it's also high in acid and low in tannins. So it pairs perfectly with your Thanksgiving dinner. I like to think of it as the like a liquid cranberry sauce. It's, bright and zippy, and it cuts through the richness of all the, the turkey and the stuffing and the gravy and the, so it just coincidentally pairs excellently with Thanksgiving dinner. And the very last point, I know that Dad, you're itching
No,
to
no,
move on.
this is good. This is good.
The
Yeah.
last point that I want to make is that, so for many people, Beaujolais Nouveau is the only Beaujolais that they're aware of. But if you remember, Beaujolais Nouveau, this is kind of like their lower tier grapes that they just quickly fermented to toast the rest of their harvest. So Beaujolais, the region of Beaujolais actually makes some incredibly beautiful wines. They have 10 cru regions of Beaujolais, and each of those crus have different characteristics of the gamay that they produce. So if you and they're going to taste a lot different than the Nouveau. They're going to be a lot more a lot more complex. There are going to be a lot more richer tannins.
Let them sit in the bottle for more than a month,
More than a month, yes, but they still gamay does like to be enjoyed fresh. So I challenge you, uh, if you haven't had Beaujolais before, to maybe pick up a bottle of a Nouveau and enjoy it at whatever kind of Thanksgiving celebration you have this year. But to maybe go further and go to your local wine shop and try one of the cru Beaujolais, because it is excellent. And I think that it is one of the regions of France that people uh, do not explore, and it does not get the respect that it deserves. And that is my spiel on Beaujolais wine. So,
Okay.
Dad, thank you for giving me a minute to talk
That's
about.
okay. Realistically, people are probably more enthralled with Beaujolais Nouveau than they are with ETFs and mutual funds. So am I. I mean, I used to buy a lot of Beaujolais Gamay. There's a bunch of, I used to drink a lot of that years ago before I switched to Spanish Reds. My but
Well, there's the
someone's
Beaujolais Nouveau, there's Beaujolais Village, which is not the cruise, but not the bulk, and then there's
well,
the cruise.
Wanda is asking, can we spell it? Don't ask me to spell it,
Well, I
Wanda.
see. So, there have been people who, in the comments, have kindly come in and spelled it for her. So I think that's probably
Oh, okay, I see it there. Yeah, so who all do we have here? We have
and
Mary and Nadine.
Beaujolais can definitely help kill the bad aftertaste of the political polarization. And I found that whiskey is also helpful.
Gin.
Cabernet works, gin works. There's a whole array of alcohol that can kind of help dull
If
that
some of you want to do a testing to see what does and report back to us next week, let us know which particular alcohol washes it away the best. But I see we have Cindy and Bruce and Miranda and Mary and Nadine and Beth and Brad and Wanda and Rick and James, all saying
and
hello
Pat
to
and
us here.
Dave and Lanny
Rich.
and Jane. Oh, we're overlapping. Sorry.
Okay, well, Lanny is here. Rick and I assume Marcy is here. David, Pat and Dave, Rick, hi Rick, and Patrick. Boy, the whole gang is here. The whole gang is here.
It's also Amy wanted me to point out that it's also Monopoly Day.
Yes, that's the best day. Monopoly. Love Monopoly. Thank you. Thank you.
So
and
it is
Monopoly
Monopoly.
also goes well with Beaujolais Nouveau. The game will go much better if you're all drinking a few bottles of cheap Beaujolais Nouveau,
All right, Dad. Well, I appreciate you letting me segue there, but I imagine that we have another reason that we're all sitting here.
Yeah, we got to talk about something work related, like it or not.
Oh,
What
man.
is our topic for today, Sam?
Well, you know, people are, what are stocks versus bonds, but today we decided to pick apart the difference between a mutual fund and an ETF.
That's right. Mutual funds versus ETF. And ETFs, what does that stand for?
Do
And,
you want me
and
to answer, or do you want me to see if
sure,
other people know?
you can answer.
All right, exchange traded funds.
That helps a lot, I'm sure, that tells you everything you need to know. So let me just kind of give you a lighthearted overview. If I really got into the weeds on mutual funds and ETFs and the tax structures and everything else, this is a happy half hour. If I really got into the weeds, we would neither be happy nor would we be able to do it in half an hour. So I'm going to kind of keep it lighthearted. And let's start with some history, because history is sort of important as to why these things work. Let's start with 1929. Sam, what happened in 1929?
Well, I imagine that I envision this large crash.
This large crash. None of us were probably around then, but we've seen the black and white movies of the soup kitchens and all. The stock market crashed, and it was about as fast and far as it did in earlier this year. But that's another story. Do you know what percentage of the U.S. population lost money in stocks in 1929?
Well, actually, I believe it wouldn't be many.
Not many. It was something like 8%. Because back in 1929, mostly rich folks owned stocks. You had to go buy stocks and brokers, and so the common folk didn't lose money in the stock market. Now, their bank accounts went away as the banks collapsed and all, but that wasn't in 29. The average Joe didn't invest in stocks. Now, how about 1974? Besides that being the year I graduated from high school, what else was invented in 1974? Amy,
IRAs. I know it's the first IRAs, right?
It's the first IRAs.
Nice,
The
Amy.
individual retirement account was created by Congress in 1974. So now we had a place where people could invest money before paying tax on it and save for retirement. In 1978, besides that being the year I graduated from Cornell, what else was invented in 1978?
I know that too. It was the first 401k.
401k.
I'm paying attention.
Man, Amy, you're going to take my job pretty soon.
Yeah. And 401ks are nice because they're at work and they can take money right from your paycheck and put it in there, without you bothered, and actually put more in than a 401 than an IRA. And by 1983, over half the big companies in America had 401k plans. There's some interesting stories there, because when I was researching it, some of the guys that created 401ks were saying things like, we didn't intend this to make Wall Street rich, but that's kind of what it did. But that's another story. So now we had places for people to put money. Now, if you're going to invest in the stock market, do you want to buy just one or two stocks, or do you want to buy a diversity of stocks?
Well, I'd imagine you want a diversity.
Yeah, you want to buy lots of stocks. But if you're putting in $50 a month, and probably in 1974, it's more like $20 a month, if you just want to put a little bit in, you couldn't afford to buy a wide variety of stocks. It's kind of hard to do. So what they did is they invented a system where you could put in a little bit of money and everybody would put in money, and somebody would buy a big diversity of stocks. So your $50 a month would be spread across lots of stocks because so many people were putting money in. And that's what's called a mutual fund. That actually goes back into the 20s too, but they really started moving and doing well in the 70s. Um, and they would have a manager, an expert investor figuring out what stocks to buy. And boy, back in the 70s, there were some rock star mutual fund managers. Anybody remember Peter Lynch? Peter Lynch had what fund was it? I think it was the Magellan Fund. It was like the biggest fund in the country. I don't remember exactly, but at one point, like 2% of the money was in the Magellan Fund. And he was doing great. He was a great investor. And so people started, and it was nice because if you had the Magellan Fund in your IRA or 401k, you could get diversity. The trouble is not everybody was a rock star investor. And so some of the funds didn't do so well, but let's back off and look at the big picture on mutual funds, the advantages and the disadvantages. One of the advantages is you can get diversification. You can get lots of stocks and you can do it with small deposits at a time. That's its big advantage. But there's a lot of things that aren't so good about the average mutual fund. One is it's not transparent. It's like a black box. They only have to tell you what's in there twice a year, every 6 months. And then in the meantime, they could be doing all kinds of things that are not, you can't see. And another big complaint on mutual funds are the fees. There's lots of fees associated with them. You know, some funds charge you 5 to 6% just to get in. And then some of them will charge you 0.5% to 2% a year to be there. And then there's fees.
And if you're not familiar, it's difficult for you as a consumer to know which ones are charging you those fees and which ones aren't.
Yeah, and there are fees behind there, trading fees and all that you'll never see.
Yeah, it's not very transparent.
Not very transparent. Another big disadvantage is because of the way it's structured, you can only buy or sell the fund at the end of the day. So if you decide, hey, I'm going to sell my fund, you won't know what it's sold for till the day is over, till the end of the stock market day. And then taxes. If you've got non-IRA money in a fund, the fund's buying and selling things, and because of the way it's structured, even though you didn't buy or sell anything, everybody else is buying and selling, can cause you to have, they often call it phantom gains. I remember myself back like it was probably about 1981, when 1981 or two, where, you know, the market fell. I had a mutual fund. I got a bill for taxes. Because the fund had to sell something, they sold their winners, and I got a capital gains, even though my fund lost money. So it's kind of crazy because you got something that you don't know what's in it. You don't know what it'll sell for you. You don't know what you paid for it to the end of the day. And you're not sure what the taxes might be. So now a couple things went on to improve things. One thing was 1976, there was a guy named John Bogle started a company. You remember the company, Sam?
Well, I can see that you're writing Vanguard.
I know it. It's Vanguard.
Okay.
I was thinking Bogle, that isn't that game Boggle, but
No,
I guess Vanguard.
I love that game. That's a great game.
It's a great game.
He started a company called Vanguard, where what he said is, instead of having an expert pick the stocks, we're just going to buy stocks that represent an index. So they're going to buy an index like the S&P 500, and you're going to go up and down with the S&P, but it's going to be cheaper because you don't have experts you're paying to do all this. We just got a computer in the basement that's doing it.
Hey, Dad, do you think you could just really quickly give a quick sentence on what an index is for somebody who may not be aware?
Well, when you listen to the radio or the TV, you always hear about the Dow. The Dow is an index of of 30 stocks picked. The S&P is the top 500 stocks in the country, and they put them together into a number and look at how it's doing. So the index is telling you how a market is doing. They'll have an index of energy stocks or medical stocks or things like that. So,
Okay, thank you.
so by doing an index fund, we just follow the market up and down. We didn't try to be an expert. We just did it. And so it was a lot cheaper, but I still couldn't sell it to the end of the day. I could have tax ramifications and things like that. Someone came along in 1993 was the first one, and they figured out a different structure. Instead of you owning a piece of the pie, the fund you owned had everything in it, and it worked like a stock. You know, with a stock, you can sell it during the day. You only pay taxes when you sell it. You know just what you have. And so if a stock and a mutual fund got together and had a baby, it would behave like an ETF. It kind
So
of
you
took,
got your own personal pan pizza.
that's right. That's right. It's like your own personal pan. I like that. So now you had transparency. You could sell it, buy it, and sell it during the day. You didn't really see taxes till you sold it. It had all the advantages, and most of them are doing just what Bogle did. They're just following an index, so they're real cheap. The fees are can be very, very low on an ETF compared to a stock. So the exchange traded funds kind of got rid of the bad parts and made they became a better mousetrap, an improvement, but still let you invest little bits of money in every month and participate in the market in your IRA or 401k. So that's kind of the difference between them. You know,
Well, why would anybody want to buy a mutual fund?
why do we still in fact, there is a statistic that is kind of common that 90% of the mutual funds don't beat the index or the market they're trying to beat over a 10-year period.
Oh,
But 10% of them do. So some people, sometimes a stock picker like a Peter Lynch can outperform the market. And you'll also find that it's more common in certain markets, like in the bond market, mutual funds, a good mutual fund guy or gal can outpick just the index and more than pay for the fees and the disadvantages. Sometimes things like emerging markets, they do. In the strategies we use, we have a group of the money managers we use have a formal process to look through each index and say, is there a mutual fund that can outperform just the ETF? And should we use that? Or should we just buy the ETF? In things like the S&P 500, big stocks, they're ending up with the ETF. No one beats it. But in certain bond markets and certain others, they have some that routinely more than make up for what you have to pay them. So it's not that simple, but luckily we got experts that know how to figure all this stuff out. So
okay. So what you're saying is that mutual funds still have a place. It's just very important to be conscious about very particular about the ones that you're choosing.
Very particular.
If you're going to pay the fees to have one, you want to make sure you're choosing the right one.
You want to be sure you're choosing the right one. And the other side of it is many investment groups that aren't, say, fee-based. See, fee-based, like, we're a fee-based fiduciary advisor. We get no money for what fund you're in. Okay. So we're product agnostic. We just get a fee. The pot gets bigger, we all make more money. Pot gets smaller, we get less. but a lot of brokerage firms get money from the fund you're in. And some funds will give them more money than others. It's called revenue sharing. And there's certain funds, American funds is sort of an example. They're often doing a revenue sharing, and you can go, if you know where to look in the disclosures of some of these big investment firms, you can find it. You know, they're doing revenue sharing. So a lot of people will still have mutual funds because the reward system for the person helping them, selling them things, is based upon the mutual fund fees. And so they will be, oftentimes the company will almost make them sell the funds, or formally say, hey, you got to, everything we sell is somebody that gives us, is giving us revenue sharing. So there's a whole world there. Maybe we should do a session on how advisors get paid sometime.
Oh,
That
that would
might
be a
be an
good one.
interesting one too.
Yeah.
But what do we do? What's our favorite part of the day, Sam? What's the thing that we like to,
Wait,
Oh,
wait, don't
yeah,
forget. Ding, ding, ding. Okay, good.
well, my favorite part of the day is absolutely the wine drawing.
okay.
I love giving people free stuff, and I feel so powerful. I get to choose the names out of the.
Yeah, those of you who are new today, you know, every week we have a wine drawing. To enter, you need to either send us a question, send us a message saying you recommended it to a friend, or you're going to do a watch party, or just send us a message that says, hey, I'm coming, you know, enter me in the drawing. So we're going to do that in a minute. But I thought beforehand, I just mentioned one more thing, because man, we have found that we have a lot of people joining us for Happy Half Hour that have never met us. They've been friends, and you know, they're friends of some of our clients. They've found us here, and we had some say, hey, can you know, you guys, can you look at our stuff and give us a second opinion on what's going on? And I just thought I'd talk just briefly about what that second opinion looks like. You know, if someone comes to us and says, hey, uh, give us an opinion, here's what we do. First, we look at their income plan. And if they don't have an income plan, we build one for them, at least a preliminary one that says, where's the money going to come from for the rest of their life? And that tells usually two extremes, two things. One, it tells them, are you going to run out of money before you're done based on your plan? What I really like is when it says, hey, you should be spending more money because you have that ability, you know? And so we do the income plan. Next, we look at the investments, and we got all this fancy software, Morningstar analysis, and all that can look into the investments they have. And it looks for a couple of things. One, it looks at the risk they're taking. And you know, part of that is the risk tells us whether you might run out or not, depending on how that's set up. But it also looks at what I might call the tax diversification, because you know, diversification isn't just what investments you have, it's what's the tax on that investment. And that leads us to the next one, which is we look at a tax plan. How much taxes are you going to pay in retirement? And more importantly, are you going to be paying too much? And there's some things you could do now to minimize the tax, not this year, but in 5, 10, 15, 20 years. There's some things you could do now to reduce the taxes. And guess what? If you reduce the taxes, now you might have to be able to spend more in retirement. So if you would like to get a second opinion like this from us, Amy, how can they get in touch with us to find out?
They are going to call 910-815-3100, or I'm going to actually just post a link directly to your calendar, if you're okay with that, into the comments here on Facebook, and they can just click that link and book themselves. Are you good with that?
Yep, there's a link in there. There's a little place, you know, you can just pick a 15-minute period, start with a phone call, just talk about it, see if this could be right for you. And, you know, we welcome that. So enough on mutual funds and ETFs. Let's go back and get to the fun part.
Yes. I've got a new bucket today for the wine drawing. And again, like he said, basically any way that you can contact us and let us know that you'd like to be entered into the wine drawing, either refer our happy half hour to a friend or respond to one of our emails by saying, enter me into the wine drawing, or asking a question or giving us a potential topic. Anything that you can do, we want to give away wine to you. It's one of our favorite things about this. All right. So today's winner
Drum roll.
is Jeanette N.
Jeanette N. Congratulations.
So congratulations. You have won 2 bottles of wine. They are going to be shipped directly to your door from Fermental Bottle Shop, located in Ogden. It's a really great locally owned, family owned bottle shop. We'd love to support them. We love to support local. So Amy is going to be in touch with you, and we are going to make sure we get 2 bottles of wine directed to you. And then so when you join us next, you can sit down and watch with one of them.
And next week, what is next Thursday?
Well, next Thursday is Thanksgiving.
It's Thanksgiving. So we are not going to have our normal happy half hour on Thanksgiving because, well, it's Thanksgiving. But we may try, we're planning, we may try to do a 5-minute special recording come up at the 4:30 time period.
We're gonna do something fun right at 4:30. I'm gonna make it happen. I promise. I'll make it happen.
We know that many of you, we have several of you who've been on here week after week,
weeks in a row.
And many people come back and watch the reruns. By the way, if you can always tell your friends to come watch it on our Facebook page. And so we just make sure you get your fix. We'll do something quick and fun. So tune in next Thursday, 4:30, if you get a chance for something quick and fun. If not, you can watch the recording. And with that, well, cheers, and everybody, happy Thanksgiving.
Happy Thanksgiving. And happy Beaujolais Day.
Happy Beaujolais Day. Monopoly Day. Bye-bye.
Monopoly Day.
Yeah, thank you for the Monopoly Day. Yes, I was going to chime in. Happy Monopoly Day. Thank you.